All right, good morning, everybody. We'll go ahead and get started with the revenue funds webinar today. So as we get into the agenda, we're going to go over basically the two types of different revenue or income that we deal with here at the tribe, with enterprise revenue and another one called other direct posting. And most of these references are coming straight out of the accounting manual. We'll go through some reports that are useful if you're researching revenue specific detail, how to search for income, how are we depositing funds, what accrued income is. There's a lot of questions on the registration forms about carryover. So we'll go through a little bit of what the carryover process is. And at the end, we'll talk about budgeting revenue. So we get into the two types of revenue that we're going to discuss today. We have enterprise funds, which uses Intacct for generating invoices and billing customers. These are also programs that have their grant awards managed through order entry. That sounds foreign to you. This is what the program monitors do for programs that have drawdowns. As we draw your funds down, as we create transactions, whether it's payroll or you're paying for your program's bills. The generation of an invoice or a grant award invoice doesn't affect our cash when those things are created. Instead, we accrue the revenue to revenue, and we debit accounts receivable to monitor the balance until it's paid. So this is characterized by an entry through receiving a payment that credits accounts receivable and then debits cash. So we create an invoice which affects our revenue. It looks like we've had revenue, but it doesn't affect any of the money on hand until that invoice gets paid, is the basic gist of that. The other type of revenue we have is called other special revenue funds. These are where we receive donations, miscellaneous type of revenue, leases, taxes, general funds, casino, stuff like that. These are posted directly to revenue in cash. There's no accounts receivable involved. So whenever this money hits our revenue accounts, we also know that the cash has been received for that and is ready to be spent or budgeted. And so here's some examples of that type of revenue. For enterprise funds, we have grants, whether you're getting money from the Department of Justice, Department of Agriculture, HHS, places like that where we're going to draw down funds because we don't receive all of them at one time. We receive them as we spend them. Or if we're generating invoices, places like IT, Koya, solid waste, childcare, programs like those use Intacct daily to generate invoices to bill their customers. So, and again, these are characterized by the use of Intacct to generate invoices. The revenue is accrued to the date of the transaction. Whether or not we've actually received the funds doesn't matter. We're accruing the revenue to when we're saying the services are being sold or received. Programs and monitors can use the trial balance to obtain balance information about these funds. And we'll get into an example of that when we get to the reports part, to where we can look to see if we have a grant that relies on a drawdown. We can look to see how much money is available left to draw down. Or if we're billing our customers, how much in unpaid bills do we have versus the revenue we've posted, so we know actually how much funds we can budget. In these situations, financial reports may not provide the balance information we need to make informed decisions. In particular, if we're billing our customers, like solid waste bills one of their customers $50 for solid waste services. That bill is included as revenue, but if that person hasn't paid it, the cash certainly hasn't arrived. So if we have our financial report, the financial report will include that $50, which is great, but we're not going to have the cash to back that up. So we start to push these other reports to supplement a financial report for monitoring our balances and making better decisions and budgeting properly. Now, the other special revenue funds, these are the special taxes, motor fuel, cigarette, luxury, alcohol, donations, revenue from table rentals, flag sales at the tribal admin building, and then other types of revenue. Our accounts receivable department and finance post this receipt of these funds. They just post it directly as a journal entry into your cash, into your revenue. It's immediately reflected on a financial report, and it's accrued the date the cash is received. And the tracking of this and reporting of it relies heavily on how we enter that information during a journal entry. So we're going to get into like the deposit form, if you've ever completed those, maybe some stuff we could be using to better inform the accounts receivable department how you want this entered, and then for reporting later. So I've mentioned the reports. We have a handful of these reports here. These are the reports primarily that we would refer to. If we want to detail information, we're going to run a general ledger report. That's going to detail every transaction in the period of time we're looking, whether it's our entries to revenue, accounts receivable, cash, that type of stuff. If you're running a program that bills its customers, you see that there's an accounts receivable balance on your trial balance. An AR aging report is going to detail to you who those people are or what invoices those are that haven't been paid yet. Basically, your outstanding debts. The summary reports we can use are like our fiscal year reports or our life to date reports. Depending on how your program operates, if it's a multiple year grant, you're certainly using a life to date report. The programs that are invoicing their customers use fiscal year reports. The dimension balance report also gives us summary information and allows us to zero in on certain types of activity. And then of course the trial balance. So we're actually going to start with a trial balance report. So if you haven't run one before, we go to General Ledger, and under the Reports header, we're just going down to where trial balance is. And just like any report, what period of time do we want to look at this report? It defaults to the current month. For this one, I'm going to run it for a fiscal year. You could use the drop-down box and look for fiscal current year. Or you could type the date, the opening and closing dates here, and it overrides the selections up top. So I'll use the drop-down box. In this one, we're using Koya. And so I've got their program, their checkbook, and their funding source. If we were concerned about just a specific customer's activity, we could certainly enter that customer number here. Vendor, employee, all of that stuff we can use. We're going to leave the rest of the selections blank because we want all the activity for the fiscal year to come up. And if you haven't used it before, when we go to Format, under the Show Zero Balance Account section, pretty much we only want this to see the accounts that had activity, so only with activity. If I leave it at all, and then view the report so we can see what it looks like, it'll include every single account in our chart of accounts, regardless if there's activity. And so this thing's going to be 500 some lines long to include all the accounts that we have possible. So what we want to do, one of the very first things you do when you run this report is show zero balance accounts only with activity. Likelihood is your program isn't using statistical accounts, so we also want to make sure do not show statistical accounts. I think right now TELP and community services use statistical accounts, so they might have purpose to use this. But so we're going to have this on only with activity, do not show statistical accounts, and then we can view this report. And so this leads us to the fiscal year activity for Koya's revenue account. From here, they can start to make decisions, starting with the 4s and then going up. Any account number that starts with a 4 is a revenue account. And then 5 or higher is an expense account. These other accounts, 3 and lower, are our balance sheet accounts. These are the activity that doesn't show on a financial report. Things like our accounts receivable balance. And so when they're preparing to not only see how much revenue they've generated through airtime advertising sales, this $2,075 indicates how much they've billed people, not necessarily how much money has come in for the fiscal year. Our accounts receivable account becomes important in understanding that revenue, because now we can come here and see, here's that $2,075 they've billed. They've brought in $2,100 for the year. So our revenue, this $2,075, has brought in $2,100 for the fiscal year, which is probably payments that were bills that were generated before the year started. So we would know certainly that we have $2,075 that we can now budget. If this amount under accounts receivable, this $2,100 posted this year, was less than the $2,075, we certainly are going to be wanting to question whether or not we can actually budget that $2,075, because this would tell us that while we've created the invoices, those payments haven't come in yet. And if we compare this to looking at a financial report for them, just the regular fiscal year revenue and expense report, all right, so that's done running. We can see the program has certainly budgeted the $2,075 that they've collected this year, that they've billed on. They've had carryover that was done from fiscal year 21, and then where they've budgeted throughout the year. We can see their revenue budget and their expense budget balance. So great, we're good as far as the budget's concerned. Since those two items balance together, they should always balance. This column tells us, of course, what they've actually received and what was posted this year, and the expenses that have actually accrued for the year. What we don't see, of course, is if we use this as the support to create a budget mod, the program, the monitor, anyone else reviewing this isn't a good snapshot to understand whether or not they've actually collected on the $2,075. Instead, we want to be able to include this trial balance that shows this line for accounts receivable certainly had funds come in this year greater than the amounts that we've billed. All right, we'll get on to the next set of reports. Again, if you do have questions, please use the chat box in the bottom right corner of your screen. Now, if I'm Rondell and I'm looking at this report, I see this accounts receivable for the fiscal year is great. More money's come in than we've billed. But what we can see is we brought in an open balance on October 1st of over $11,000. And overall, our balances still are over $11,000. That's gone down a little bit, but there's still balances there. If we needed to find what it was that was due to us and find it easily, we might have a difficult time. You can click on the blue links here and it's going to take us to the activity that's happened for this period. So this $11,000 might not be included. So if we're generating our own billing, you have a report under accounts receivable called customer aging report. So if we go there then to report, it's going to give us a breakdown of bills due to us in this range. Stuff that is 0 days past due, 1 to 30, 31 to 60, 61 to 90, 91 plus. That report is as of today, so it's going to match what our trial balance says. And we're going to base it on the due date of the invoice. So they'll get a summary based on those ranges up here based on the due date. If it was a specific customer, we can certainly put in that person or the business, whoever it is we're looking up. but we're definitely going to use our checkbook in our program. Do we want this in detail? And if we use detail, it's going to give us each invoice's number and how many days it's been since that invoice has been paid. We wanted a summary, it's just going to tell us the customer and how much is due. So you can make your choice there. We can choose how we want it to be sorted by name, amounts due, whatever it is. Customer name is usually a pretty good one because it's pretty well organized that way. So let's go ahead and view this report. And so as it runs, we're looking for this open balance of $11,858.76 from our trial balance. So our report gives us a detail. Here's all stop and the different invoices, how long it's been since those have been paid, the amounts that are due, and a blue hyperlink that would take you to each invoice. So if you needed to research that further to know what is this $600 that hasn't been paid for 500 days, you can click on the $600 and that's going to take you to that bill. And as you scroll through, you can see what hasn't been paid. Here's that total balance, $11,858.76, $11,858.76 from our trial balance. So if we're working out how to collect on those payments, we've just been able to do that. Here's our balance. Here's a list of who owes us and a link to each of the invoices that we can go to, research, and take action on or try and collect on. And the same would work for grants that have drawdowns. If we create drawdowns that haven't been paid, they're going to sit here as in the aging report as either being past due, and it'll give us this counter, depending on how long it's been since we've created the drawdown and how long it sits there unpaid. All right, any questions from accounts receivable people on this trial balance report or that aging report? Okay. Another instance of a report that we can use, and now we'll focus on the other special revenue funds, the stuff that comes directly and isn't going to be through accounts receivable. If we go to the report center, you can generate your financial report as you normally would. And so this one, we're going to look at motor fuel. And so we have their program checkbook funding source. And here, whenever we select this option for the funding source, the financial report is going to return this to us. But if there's any funding sources that are assigned to it as a child for reporting purposes, this is going to grab those funding sources assigned to this one as well. So if we run this report, we might end up getting information that includes other funding source data. And that's what's going to happen with this one, is their motor fuels revenue account has another funding source assigned below it. So this report's going to combine their revenues, their expenses, and budget lines. However, if they were looking to see on the motor fuel taxes what they operate through, we can see what's actually been received. This $234,000 is what's actually been received to date. Unlike the example we were looking at with Koya, this money is actually here. The cash has been received. So in their instance of how they're going to use this report, when they're ready to do a budget mod, if this number here is greater than their budget, we know there's available funds for them to budget. It means we've received or posted more revenue than they've budgeted to that point, which happens once a month when the revenue comes in, which, as it says, it's motor fuel tax. So it's based on motor fuel sales on the reservation. Their program can certainly run this report just like this, the revenue and expense, the one funding source view report. It's going to give us a hyperlink to where we can get to the general ledger detail and actually see the different pockets of revenue that's coming in, and then follow the hyperlink even further to the general ledger entry. and then the attachments that would be there, so we can make that determination. Whatever the document is that's going to come, here's the bank confirmation that it's been deposited, and then the documentation that comes from the state telling us what's making up those amounts. And so that's accessible to you as a program user at any point for any of your funds. You can follow that trail there to get to the actual detail of what's happening with the money, particularly with your revenue. As I was saying here, this is also including some sub-funds, so this might not be representative of just the funding source. So you gotta be careful with the fiscal year report. The report that we can rely on, like in this instance, to make sure we can zero in on just that single funding source, is a report called Dimension Balances. So if you haven't used it before, it's under General Ledger, Reports, Dimension Balances. And similar to that trial balance report we looked at, or to a general ledger report, we're going to come here and we're going to tell it what period of time we're looking at. So if we're motor fuel, we want information for this fiscal year. We can go from this drop down box, find fiscal current year. And on this spot, you want to be careful because there is something that says current year. For Intacct's purposes, current year literally means calendar year. This would be for 2022, not for fiscal year 22, but January through December. So if you use this designation and can't figure out why information from December or November or October isn't included in your fiscal year report, check that reporting period. We're not 100% sure. Easiest way is just to punch in the dates. Here's our fiscal year, 10/1 through 9/30. We have an option to see our budget and actual, or just actual. So let's include actual and budget. We use RST budget, so no reason for you to change that here. If they were looking at just motor fuel tax, they can select that as the range. No worry about anything else popping up on the report right now if they're just looking for motor fuel tax. We have an option to select multiple accounts. So if we wanted to know motor fuel tax plus another type of revenue, or we were also looking at an expense, something like that, we can certainly select it that way, or we can just select all accounts and get everything. So we've got motor fuel tax. Got motor fuel, we've got their checkbook and their funding source back to this 804, but we don't want to include any of the funds assigned below it. So I'm going to uncheck that because I want just that motor fuel revenue. I can zero in on more stuff here if I wanted to, but we're going to leave that out of it. What do we want to show on this report? Depending if you've used this report or not. If you've never used it, it's going to say this: show dimension values, select. You have to pick something. If I tried to run the report now, I get an error that says, please show dimension values. So we're going to select, what do we want to list on this report? Do we want to see the funding source ID? Great, let's pick that. Account ID and name. And if we use different customers and we included that in our reports, maybe we're going to have customer ID and name as another subset on this report. So this report's going to organize this first by funding source ID, then by account ID, and then by customer ID. So now we're ready to review the report. So we can see that the state of South Dakota has been marked for this receipt of $4,200, or on account number 42250, for $234,000. And that would take us to the general ledger report by following the report. So great report for us to use. And what we've done is we've cut out the sub account that's included here. And And just to show you what that means, if we wanted to show all the revenue accounts, so I've got all accounts and I'm using a group called all revenue general ledger accounts. I'm going to include the subs on this one, and let's get rid of the customer ID. Now we have all of the revenue. Apparently on the other funding sources, no revenue posted for the fiscal year. So now we have a snapshot of just our revenue, snapshot of what the budget is. So we can see we fully budgeted motor fuel, fully budgeted miscellaneous income, gravel sales, and the carryover from fiscal year 21. If we're running the report and we included something like that customer ID, I forgot to mention this on the first one. On our budgets, we don't budget by customer ID. So when it gives us the budget number, it's not going to have a customer with it. So, when we budget Martis, you're not picking the customer also. So these reports can get pretty separated here by the actual transaction of Intacct and then our budget, which doesn't include customers. All right, back to our screen here. So when we're depositing revenue, most of us use the form that's on the screen here or a form similar. We're telling the accounts receivable department, Hope or Shirley, what checkbook to use on their entry, what deposit code, that means what account number are we depositing this revenue to. In almost all instances, you're using a revenue account, something that starts with a 4. And so that code needs to be there. Not only simplify it for Hope or Shirley, but it's also going to make sure that your deposit gets entered and is shown a lot quicker on your financial report than them having to go search for that or reach out to you. The funding source should be included, so that research doesn't have to be done and figured out or we reach back out to you. Customer numbers, if we're wanting to tie this deposit to a specific customer, we absolutely want to make sure we include that person's customer number there. If we're not sure what the customer number is, you can absolutely reach out to the monitor for help or accounts receivable for help. On our reports like this, if we go to the customer field, so we know that was, I can't remember if it was state of South Dakota. So I start typing the customer, there it is. I know now if I'm gonna fill out this report, C3317 is my customer number. So certainly you could look for yourself or reach out to the finance office for help to get that customer number. Without that number, it's going to make researching or finding these deposits and who they're for pretty difficult to do. And I have an example to show us from a general ledger report. Sorry about this one, Eleanor, but I'm using your program as an example in this one. So in January of 21, we had a transaction post to revenue. So I've just got January 5th entered as my start and end date. No need to worry about what's up here. So the account number that IT uses for their revenue. Here's their checkbook and their funding source. The dimensions I'm using for the general ledger report are saved from the last time I used the report, which is include the funding source and a customer ID. So if we're researching revenue, did whatever program pay us? For January 5th, here's the amount of money that's come in. We can see all lines but one has a customer number. So depending on who the customer number is, certainly these ones are gonna be able to be zeroed in on for just that person. for whatever period of time, but this one entry is come across as just various customers, no customer number. So if we end up having to research revenue and what the source is, we're not done here. We actually can't use an Intacct report to figure that out. We have to go further and further into the transaction. So we'd have to follow the link for the journal entry. So we're going to click on the amount. Here's the journal entry. Nothing we can have here but various customers. So you have to go in further to whatever's attached. Now we have two different attachments. So here's that bank confirmation on the desktop deposit. And this one's for $1,100, so it's not the full deposit. That deposit was certainly a lot more. So now we have two different attachments we have to go through. And you would hope on this, we're gonna have a table, which we eventually do, that tells us who those people are that's paid. And then you could go through both attachments, figure out who that is that's paying, and maybe create a spreadsheet outside of Intacct to say that who that's going to be. What we'd expect to see is this customer's customer number included with the deposit, and on the entry, Hope or Shirley, whoever makes the entry, can use that information to be able to include that in the report, so that once we get to the general ledger report all the way back here, that's included in the breakdown of this $5,000 deposit. And then we can run a report on just that customer that we're researching and not have to wonder whether or not our deposits have come through without that important information. And so you can use a form like this, or you might have a second page that's going to break that out by customer number. Here's the customer number for SRD, for diabetes, for whoever it is. And so like same thing for SRD, prior from October through December, received a lot of money for the conferences that were held up in Rapid City. So in their deposits, would they have used this form and customer numbers for tracking so they could verify the programs that have paid? Or are we going to have to hope that there was a separate spreadsheet outside of Intacct that's been maintained and always accessible like Intacct is? So we can make that determination of whether or not finance says they've sent 5 people and paid. Do we have that recorded? Or are we going to have to search that through a report like this and then start going through all the different attachments, hoping to find all of these different checks we've collected? So these parts are critical and integral to making sure that when we deposit our revenue, we can search for those later in all these different reports we've just gone through our trial balance, general ledger report, dimension balance, any of these reports. All right, any questions on the deposit form or customer numbers, that type of stuff? All right, so let's talk about income accrual. So according to the tribe's accounting manual, we conform to generally accepted accounting principles. That means revenues are recognized using the accrual basis of accounting and recognized when earned. So cash does not have to change hands. So when we earn that money, not necessarily when the money has come in. So that's important it's a critical thing to know about your revenue for you to understand whether or not money's come in, right? We're gonna record that revenue when we've earned it. And so what we basically mean by that is if we go to this, let's look at a trial balance report for a test fund I have. We might just have it for the month of January. I have a test company and the checkbook that we use. And when we run this for this month, there's going to be no balances anywhere. So we have no revenue balance, no accounts receivable balance. So we know that it's functioning like nothing pending or outstanding for this program. There's certainly transactions that have occurred as I record videos and demonstrate how to use the system. If we were looking to see how much revenue we have right now, there's none, right? Balance is $0 in our revenue account. So when we get into what we mean by accrual, if I create an invoice for that program, so we put out an invoice for $100 due from this customer, Test Me Testerson. When we refresh this report, we're going to notice some balances are going to change. One, we now have revenue. And two, we now have an accounts receivable balance. Those happen to total $0. So even though we've generated revenue, more importantly, that top line, we've generated no cash. We have to accrue the revenue to when it's earned. So our sale happened this month. So here we are, we've recorded this $100. But we don't have the cash yet. And I give an example below. Solid waste will bill its customers and income will be accrued to that invoice date, not to when the cash is actually received. So when we all get our solid waste bills in the mail and sometime in the first half of the month, they've already recorded that revenue from you, even though the cash hasn't come in. So their financial reports, when they look at that, it's important for them to distinguish that we've created a bill, it's still outstanding. The result is no income, no cash has moved our way. So if we were going to budget that, we don't have the money yet to budget. It's once these bills start getting paid and we start affecting this open receivables balance that we can then start to calculate, okay, we've created $100, we've posted $100 in earnings. Our open bills are now lower based on however much has been collected. So if $20 was paid, we'd have $80 here, now telling us we have $20 of revenue we can actually budget. And so the accrual here is what can happen that can be confusing, particularly if you're an enterprise funded account. If we're one of the other types of revenue, SRD, motor fuel, we don't have to really worry about that because we're not creating invoices through Intacct. We're receiving the money directly to our cash and revenue accounts. But it's so important to understand for those of you relying on drawdowns, those of you generating your own invoices, this is how your revenue is recognized. So we know we cannot solely rely on a financial report. If I run a financial report on that test funding source that I used, what do we think it'll look like? We would see the postal revenue. We'd see that it wasn't budgeted and that we haven't budgeted any expenses. Certainly this would give us the impression that we're ready to go to Martis and budget this $100. If we only look at the financial report, the monitor may prove that, and the others in the workflow. And then when we go to spend it, time for Lynette to approve your voucher and there's no cash for it. So if you're generating invoices, use two different reports. This to establish what you're receiving and how your budget stands. This to actually establish what's available to you to spend. So there's a question, how do you enter in Intacct daily cash receipts, tribal ID fees, transportation fees versus invoices, as we do now? The example we gave with motor fuel earlier, as the funds are received, the accounts receivable department in finance posts that money to revenue and to cash as it arrives. Since there's no invoices generating, those are effectively being accrued as cash. Invoices post as the revenue is earned, and eventually when the cash is received, it reduces our accounts receivable balance and no longer has an effect on revenue. So once we have confirmation that this $100 outstanding bill is paid, now we can actually go budget the money. So that's accrual accounting for you. And that's how we can still keep our books open when 9/30 happens. We're still paying our bills till November 15th and allowing people to accrue those expenses to the year that we said that they were spent in. In other words, we had a purchase order that we used in August. We got the material in August. We just haven't gotten the bill yet. So we're saying that we spent that money in fiscal year 21. Not, if we opened a PO in September and actually didn't go get things until October, that's not a fiscal year 21 bill. So we actually have to either earn the money in that fiscal year or that period of time, or spend that money, meaning we've gotten the goods in that period of time. And so that's how this works for earning revenue. If we're going to budget revenue in Martis, so this $100 example, hey, we verified it's good, we're ready to budget. We're going to go into Martis, we'll go to our change requests. We can create our new change request. Find the worksheet, the checkbook and program called worksheet in Martis that we're going to work on. This has never been budgeted. We confirm that with this report here, so we're certainly making the very first budget we have for it. So we're going to select the accounts we want to budget, the funding source we want to use, and we can add this to our worksheet. And depending on how much of that receivable we actually cleared, we cleared the whole thing, great, we can budget the whole thing. So now we've generated a budget proposal for our revenue. And if we're going to spend that money on office supplies, we've proposed in Martis to budget that $100 of revenue. We've proposed to budget $100 in expenses. And we can see how it's presented on screen. The revenue is shown as a positive number because it's increasing as far as Martis is concerned with the math. And an expense subtract, so it's presented as a negative number in Martis. So those two things balance for a change of 0. We'd have whatever our explanation is going to be, and we're going to attach those two documents as one and upload that so we can submit. And now the people reviewing will see exactly what we're budgeting and that money's come in. All right. The last thing we'll get into is the carryover funds. So there's certainly a lot of questions in the sign-up sheets about carryover. So let's start with just a little table of basically the different types of funding sources we have here for the tribe. General, casino, indirect, there's not going to be carryover, so at no point will there ever be a carryover activity done. 638 funds, there's no carryover. We run in Intacct by the contract period. So if the budget's good for, if it's a 3-year contract or whatever it is, that's how long the funding source can be used. There isn't going to be a carryover each year into a different fiscal year. We just spend the money till it's gone, which is why we go into Martis. We might be hopping back to fiscal year 20 or 19 to budget the money when it was originally received in the contract year. And then federal, state, other types of funds, they don't have carryover either. So what we're looking at is revenue funds. The SRD money we talked about, motor fuel, COIA, IT, those types of money is going to have a carryover activity done, basically some type of revenue. So this process is typically performed after the closing of the tribe's books, which we give about November 15th, depending on what day that falls on. If it's a weekend, then we adjust. Carryover is processed each year to move the fund from the outgoing year into the new fiscal year. So 21 into 22 is for our most recent one. Program monitors are responsible for performing carryover activities. A program can't just decide today I'm going to do carryover and do a budget mod. Program monitors have calculations that they do and other types of things they do in Intacct to make sure it's ready. This is based on a trial balance for that outgoing fiscal year. So not just a financial report for those of us who look at the unspent amount of money and say that's our carryover. There's things off the financial report that they have to take into consideration. And they use that trial balance to determine the amount of spendable funds available on 9/30. And that's what can be spent. So if let's go to this next slide. Program users have a responsibility to make sure all our open purchase orders are closed. So this is how you're going to help make sure the carryover process can be done by the program monitor. You're going to close all open purchase orders. All encumbrances should be 0 as of 9/30 of that year that we're closing. All of your outstanding bills must have been submitted for payment. Carryover cannot be calculated until that activity for the prior year has been resolved. If we perform carryover and determine that you have $100 that we can carry into the new fiscal year, and then after that's done, you submit a bill to pay for the prior year, that changes whatever the carryover is. And if you've spent that carryover in the new fiscal year, we run the risk of depleting the funds available in the bank for you to pay your bills. So we need to make sure that all program users by November 15th or whatever the designated day is, closes their POs and submits all payments. So when we do the carryover, we're going to get a trial balance. The process begins with the cash balance and then a review of the balance sheet accounts to determine how much is available to be spent in the new year. And those balances, like in due to payroll, accounts payable, that type of stuff, tells us how much money we can bring forward. Just because the cash is there doesn't mean all of it's available in the new year. The balance that is obtained will be entered by journal entry. They debit an account called fund balance reclassed to revenue, and they credit your revenue account for fund balance carryover. And then the prior year entry for carryover is reversed to clear that fund balance. So here's an example of what someone's trial balance looked like on 9/30. Their cash balance on 9/30 was $463,000. They submitted all of the payment, the vouchers, anything that was due for payment was submitted, and that balanced to $257,000. So the $463,000 carryover now has to be reduced by that because we have to have enough funds available on 9/30 to pay for those unpaid bills. If there was accrued payroll that had a balance, travel advances that had a balance, meaning we had an employee travel and hasn't paid that back yet, or they haven't reconciled their travel, that's going to be shown there. Due to tribal programs, if we've had funds transferred to us, if we haven't paid payroll back yet for the reimbursements to the payroll accounts, that would have a balance there, and all of those could reduce that cash balance. And so Once the monitor completes a little worksheet they use for this, they have that carryover adjustment like we show here at the bottom. In this instance, it was $206,000. Now they're ready to make that entry here that would then show on your financial report that your fund balance account now has cash posted. And that's the signal to you that you can now budget that money. So we have a question about carryover. Our funding is January through December, or the calendar year. How does this affect us? It doesn't. Funds that go by grants typically aren't going to have carryover process. You're running within the period of time that the grant is used. So your monitor bar isn't doing carryover for that in this instance. So once we've done this entry, financial reports show the credit balance to that revenue account, $49,900. That amount is now budgetable. So if we look at, back to Koya, so hopefully the program monitor does the entry and reaches out to the program, hey, our carryover is now done. The entry's there, the cash shows, we run our fiscal year report. So when that runs, we'll take a look at that. But one of the other things the monitor has to do is your funding source in Intacct has a period of time that Intacct uses to spend money. So if we get ahead of the monitor and they don't change those dates, then we'll be reaching out saying we have a message about it's exceeded the date. I can't remember exactly what that says. But after the monitor does the journal entry in a post, they then have to go to your funding source in Intacct and change the dates that Intacct will recognize for budget purposes. So we run our report, we come here, we would see the carryover was $107,000 for Koya, which is their clue to go ahead and budget, which they already have. So if you're looking at your financial report, take a look at that fund balance carryover line, particularly if you have revenue. Make sure you've budgeted that revenue at this point and include that into your expenses. All right. Any questions? Any other questions about carryover? Have a good rest of the day.